Hello, and welcome to the WARR Quarterly Market Review. My name is Matthew. I'm one of the financial advisors here at WARR, and today I'm joined by Dr. Steve Garth, a member of our investment committee. Steve, thank you for joining us today.
Thank you, Matt. Great to be here.
Lovely. It is the end of the financial year, so I think that's probably a good place to start. So how has it been over the past 12 months?
It's been an excellent 12 months return, Matt. The Australian market up 12.1% for the financial year. Now that's higher than its long-term average, which comes in about 10%. International markets, they're up near 20% for the financial year. That's way higher than their long-term financial year return. So anyone in a diversified portfolio of Australian and international shares, it's actually been a cracking financial year.
It's been a good year. So what about more recently?
Well, as you know, Matt, any long-term performance comes with a few bumps and potholes along the way. And this financial year has been no exception. When you look at the chart here, it shows both the Australian market and the US market from July last year. And you can certainly see the early part of the financial year was not so good. Markets were under a fair bit of stress, really, as at that point interest rates were going up and, the economies were slowing. Everything changed towards the end of last year when central banks announced that they'd done enough with interest rate rising and the next rate movement would be downward. And you can see that markets took off both here and the US. Now, the US continues to go up, but you'll see that at the end of March, Australia sort of reached its peak for the moment. And it's really been flatlining since then. It's really in a holding pattern. Two reasons really, Matt. One is just simply that the resource sector, which is one of our largest sectors, that's under a bit of pressure because iron ore prices have fallen because there's just lack of demand from China at the moment. Balancing that though, financials have done well. So you've got this sort of balancing act between financials and resources keeping the market flat. On top of that, inflation remains sticky in Australia, and the RBA may need to raise rates again, so that's weighing on markets a little bit as well.
That's really interesting. Thanks for the update, Steve. It would be good to know how other international markets have fared as well.
Yeah, other international markets are actually quite similar to Australia, Matt. They've had a good 12-month return, as you can see in the chart here, but they all seem to be struggling this quarter, with the exception of the US. The other international markets are either flat or negative. And again, this you'd still put down to the fact that economies are slowing after the weight of interest rate rises. Now in Europe, they've started to cut interest rates, but it may not be enough. The economies are slowing and the markets are certainly feeling that. So around the world, markets seem to be in a holding pattern, waiting for the economic skies to clear. And that is, of course, with the exception of the US market.
So I think that's a really good segue as to why has the US markets seem to do a lot better than other countries around the world?
Yeah, it's a bit of a misnomer when we talk about the US market doing so well. In fact, the US market is kind of doing average. It's very similar to Australia, but there's a couple of stocks that are doing extraordinarily well. In fact, the biggest stock is NVIDIA, which I don't know about you, Matt, but 2 years ago, I'd never heard of NVIDIA.
Not a household name.
Not a household name. They make chips and software for artificial intelligence applications. So NVIDIA being 7% of the overall US market.
That's incredible.
It's huge. And you can see that it's up 190% this financial year. So that's what's really driving the US market. You can see on the chart I've also got the returns of the New York Stock Exchange. That makes up more than 50% of the S&P 500, or when you talk about the US market, that's what you're talking about. But you can see that the New York Stock Exchange, the non-tech stocks, that's looking very like Australia. It's got a slight negative return for the quarter, but an okay return for the year. So the US market is doing well really because of a couple of stocks, and in particular because of NVIDIA.
Great. Well, thank you for that update, Steve. So just to recap on our WARR investment philosophy, we ensure that all clients hold a diversified portfolio of local and international shares to ensure we capture the returns offered by all stocks, in particular more recently, those technology stocks in the US. Thank you all for watching the WARR Quarterly Market Update. We look forward to seeing you again next time.